So let's bring in now Genter Capital Management President, CEO, and CIO, Dan Genter. And Dan, let's talk about some of the things that you like here about this market. You got a long checklist.
Yeah, well, there's a long checklist that exists out there, Charles. I mean, the fact of the matter is that the general environment that's out there is very strong and it's very positive. And we're going to have little glitches along the way. I mean, obviously, we saw a major one with regards to the employment numbers this week, but I think that the way that it was announced and the way it was revised was the surprise. It wasn't the numbers. I mean, we all knew that employers were holding back as they navigated the new tax and tariff situations. And so to have some fall off, at least short term, we knew was going to happen. So the employment numbers remain solid. We look at that effect from the standpoint of real wages, growth in wages. I mean, that's adding on to the significant wealth effect that we're seeing from the stock market and investing in general. And you've got moderating inflation. You know, we see that that's happening. We see it in the numbers. I mean, an interest rate cut is almost a foregone conclusion. I mean, the fact of the matter is, you know, we're in a slowing economy.
Right.
Long-term Fed rates are about 3.75, and we're a solid 50 basis points above. So I think general consensus is that we get 50 basis points between now and year end. That's going to provide a little more horsepower. There's plenty of liquidity out there, and earnings continue to be strong and improving. So it's very difficult to make a case for not being on this train right now.
All right, so we're on the train. Now the question is, where do we want to be? You've got 5 sectors you like: technology, energy, financials, industrials, and materials. Energy getting a little bit of a bid today, and materials, they've been somewhat disappointing. What gets those moving in the right direction?
Well, again, I think you just see earnings. I think the overall demand for energy is going to continue to be solid. I mean, the fact of the matter is, if we do end up with some fall off on the world market because of additional tariffs that are going to be on Russia, or we have other interruptions, I mean, there's nothing out there right now that's really going to show that the price of oil is going to go down significantly. And so you have companies that are taking advantage of that. I mean, you're seeing very, very strong dividend yields in this sector. That people need income right now. So it's a good place that they can even hide out,
right,
basically, if the prices are going to be stable. And what we're seeing is individual issues in that sector that are actually thriving and have, very, very strong, pipelines, so to speak.
Yeah, it's interesting because we're going to put up 3 stocks that you like here. And even though, we've got some of these high flyers, you like the financials, industrials, and tech that have been on fire, a little bit more conservative with Chevron, Northern Trust, and Merck. Is the idea also of having a good dividend at this point smart?
Yeah, I think so, absolutely. You look at Chevron, for example. I mean, you have a 4.5% dividend that's coming from Chevron. I mean, you look at Merck, it's a 4% dividend that's coming from Merck. And we also have to bear in mind is that for these are going to be dividends that are going to have preferential tax treatment. They're going to get taxed at a max of 20%. And so you're in a situation with these that, look, you're above a 10-year treasury after tax. So the income really can't be ignored. And especially if this market moves into a slower growth phase, right, a 4.5% from dividend becomes a much higher percentage of total return.
Absolutely. I think too many people have forgotten about those dividends. You got to have them somewhere in the portfolio. Dan, thanks a lot. Appreciate it.
You bet. Thank you.